Welcome to the OPEC Monthly Oil Market Report podcast. This podcast was recorded on Wednesday, October 12th. I'm Etna Trainer, and every month we'll give you an overview of the oil market, according to the Organisation of the Petroleum Exporting Countries. Let's take a look now at the highlights of the October 2016 OPEC Monthly Oil Market Report. Oil product markets in the major consuming regions have performed relatively well over the recent driving season. In the Atlantic Basin, product markets received support from the positive performance at the top of the barrel, with stronger U.S. gasoline demand hitting record levels amid higher export opportunities from Europe, which, along with some refineries' outages, lent further support to refinery margins. Meanwhile, margins in Asia have seen a slight recovery in recent weeks, on the back of firm demand ahead of autumn maintenance. Since the start of 2014, the trend in gasoline and gas oil consumption has diverged. Gasoline demand has grown strongly worldwide, increasing by almost 700,000 barrels a day in 2015, allowing the motor fuel to remain the driver of the product market even over the winter season. Meanwhile, gas oil has seen weaker global growth of around 350,000 barrels a day, resulting in a more unbalanced market, as the drop seen in demand growth in the US and China has outweighed the recovery seen in Europe and India, while supply has continued to increase. During the last months, gas oil demand growth in India recorded a significant rise on the back of a general improvement in economic activities, especially manufacturing. Year to date, gas oil consumption in India has increased by 125,000 barrels a day over the same period last year, to reach 1.65 million barrels a day. At the same time, the U.S. manufacturing sector showed only slight growth in September, while figures for the third quarter of 2016 showed a continued weakness in industrial production, in particular the mining sector, which is mainly energy-related. Despite recent reports indicating a recovery in the transportation sector since the second quarter of 2016, particularly for trucks and trains, gas oil demand in the U.S. shows a year-to-date decline of around 250,000 barrels a day, from the same period last year to average 3.8 million barrels a day. Europe is the global benchmark for diesel pricing, as the region receives large import volumes of diesel from several refinery hubs to meet its demand. New refineries in the Middle East and Asia, as well as increasing U.S. diesel exports in recent years, have led to a sharp increase in global diesel supplies, much of which is consumed and or stored in Europe. Additional inflows of ultra-low sulfur diesel are due to increased export capacity in Russia. Increased inflows of middle distillates have led to higher inventories, with OECD Europe commercial middle distillate stocks reaching 274 million barrels at the end of August, some 62 million barrels higher than the last 5-year average. This distillate overhang has resulted in a persistent downward trend in the crack spread. Looking ahead to the coming quarters, oil product markets are typically supported by heating fuel in the winter season. However, according to the preliminary forecast by the U.S. Weather Service, a colder winter so far seems unlikely. In addition, inventories stand near all-time highs worldwide, although in recent weeks these high levels have been slightly drawn down due to some refinery and pipeline outages and bad weather conditions lowering global production. With the end of the autumn refinery maintenance season, gas oil production will be on the rise, and refiners will most likely shift yields to meet middle distillate demand, supporting crude intake over the winter season. This has been the October 2016 Monthly Oil Market Report podcast, brought to you by Podcast Production Limited. If you found this podcast useful, please register your vote on iTunes. Thank you so much for listening, and goodbye until next month.